So looking ahead, what do we expect? A few things I want to touch on. First is weather. So weather always plays an impactful part in our pricing. NOAA forecasts predict a cold December, but above average temperatures for New York overall in Q1 of 25. So in the top right, this is the chart for the remaining month of December. You'll see New York in the upper right corner, below average. So it should be cold. Should be cold. And the bottom right is the chart showing Q1 of 2025. You'll see the warmth. So early projections for this winter were warm, and forecasts are continuing to project that, except for these last 2 weeks of the year. So does this mean a cold Christmas? Probably. Does it mean snow? Hopefully. I mean, maybe hopefully. I like snow on Christmas, but it's always up in the air. So what does this tell me? Is this bullish or bearish? To me, this is neutral. Cold end of the year, warm beginning of the year. There's no real market factor that goes with this. The second point are production levels. So the chart in the bottom middle will show you production levels this year in red compared to prior year in the dotted line. So last year we hit record highs, and you may recall last year was a warm winter. So warm winter, record high production, natural gas and storage was high, prices just tanked. Prompt month prices were very low last year. This year seems like it might be a warm winter again. Production levels are not as high because they don't need to be. We don't know. If the weather turns cooler, do we have enough production to keep storage levels high? We don't know. So bullish or bearish, I think this is neutral as well. One thing could switch and change, and this could become bearish or bullish either way. The third is demand growth. You've all heard about demand growth. Data centers, an interesting stat that we heard, account for about 10% of domestic electricity demand, and they're projected to grow rapidly over the next 5 years. And that's due to AI and crypto requirements. So that the amount of electricity they use, plus the growth of EVs, plus the growth of electrification, is putting a lot of stress on grids throughout the entire US, including New York State. And so demand growth is not being equaled by production growth at this time. And so that's why we're seeing those future years at higher costs. This is bullish. This is going to drive market prices high. This is why we're seeing future years at high prices. The last point is storage. So in the bottom left, you'll see the chart for storage. The blue line is current year. The gray shaded area is the 5-year average. And the gray line in between is the the gray shaded area is the 5-year min and max. And the gray line is the 5-year average. Last year, you can see that we were above not only the 5-year average, but above the maximum. So we hit a new high. This year, we're at it again. However, production levels are lower, forecasts are warm. So if it turns cold and we use more and demand goes up, that could be a change. But overall, for storage, this is very, very bearish. And this is helping keep that prompt month and current 25 levels at low cost.